Ladies and gentlemen, amidst a flurry of technical issues we have today, welcome to the Beacon TVL show. Here with Andrew. Andrew, how are you, sir?
I'm good. Looks like your mic is still staticking a little bit, so we still got some gremlins. I was wondering today, Chris, if I could just inquire to you about beard care products.
I love that idea.
I know.
I wonder if it's my VPN that's causing some issues, so I want to turn that off. But
all right. I just thought this might be an area of expertise for you. I know you have a lot of facial hair to deal with. You might have a little bit of facial hair to deal with. So I don't know. Do you think beard oil is a scam?
I'll be honest. I do not believe so. I have many friends who are entrepreneurs in the beard care sector. Specifically, coming up with their own beard oils. Based off of a variety of different substances. Because, I mean, we live in a world where people are very curious about doing their own products, right? You have people making their own sourdough. People, like I'm in the market for making my own protein bars. I am a protein bar connoisseur. So yeah, I think it's a great idea to take care of your beard because it is also attached to skin on your face. And clearly you are growing the beard back out per special request from all of your loving fans. Let me see a one in the chat if you think give me a one in the chat if you think Andrew should continue to keep his beard. I think he looks good. I think it's a good look for Andrew.
It's happening regardless of what anybody says. But yeah, send me to one of your beard oil people, Chris.
I will do that. I'll do that offline. And now that we've scared off half of our audience, let's continue.
It's all right. None of them have tuned in quite yet anyway.
This is
this is a deep cut.
Yeah, it's a deep cut. Well, we are a week removed from the Bitcoin halving. And, the market, it's been kind of interesting, I would have to say. I wouldn't say that we had a whole lot of bullish explosion. We did have a little bit of a pullback based off of some wartime conflict news. But overall, since the 20th, let's see, actually we need to go back a little bit further. So from the 20th, which is roughly around this time, yeah, around here is when it happened. It's been a fairly flat and very, I don't want to say the word uneventful event because there's a lot of stuff that happened we'll talk about in just a minute. And yeah, so we'll talk about a couple of things that should be on some people's minds when it comes to Bitcoin, moving forward. Obviously we're not seeing a pullback, obviously, but with a lot of the world news happening, there could be a little bit more of a pullback depending on if more war type moves happen. But one thing that did happen, and Andrew, I know this is one that we kind of had a little bit of discussion over the weekend about, is the launch of runes. Specifically, maybe this is the reason why Bitcoin maybe held a little bit of support, thanks to a bunch of Chads and Degens. So Casey Rodarmor, creator of Ordinals on Bitcoin, also created runes. So if Ordinals is an NFT protocol that can be done through the Bitcoin envelope in terms of transactions, then runes is the token standard. In fact, he wanted to launch it specifically to launch meme coins on Bitcoin. It didn't have to launch at the same time as the halving, but maybe it was he called it a thematic move on his podcast to go live on the same day as the halving, and probably the best way to market it, I would have to say, because it congested the network, right? So the reason I think that there's a little bit of demand for Bitcoin is because it caused miners to go into overdrive to try and proof of work. Bitcoin's still a proof of work protocol. or rather blockchain. So $127 for the average transaction in order for Chads and Degens to actually mint a rune or try to mint a rune. They had to specifically put in a bunch of gas to try and, be the first to mint specific meme coins. And they all have names. They're full names actually, because they're actually like metadata. So I think the biggest one is Satoshi Nakamoto. There's the first official rune was from Casey Rodarmor. It was called Uncommon Goods. There's more than 4,000 of them at least that have been, the word is etched on the platform. So the price for runes have come down in terms of how to actually etch them and get them launched have dropped significantly. But on Saturday, when it happened, it really just jumped up to $130 a transaction, which when ordinals was a thing, there are a lot of Bitcoiners that I know of that were fairly concerned about the fact it was costing $30 to send money across Bitcoin as a transaction. So obviously these things are windfalls for miners. Are they good for most people to try and put money into to speculate on? I mean, it's a shitcoin. So definitely high risk. Certainly there is some high return available depending on what you're wanting to do. I personally don't have any plans to get into Bitcoin runes. I think they're a little bit too expensive for me personally, even for something completely speculative. It's a pretty high bar to get into. And even if you wanted to get in early, technically it was really difficult, to be quite honest, because based on everything that I read, and I didn't really share this with our communities because it was really technical. You just set up a whole node to sync with the network. Yeah, like I said, I'm going to go into it, but Andrew, do you think that stuff like runes, we talked about this last week, is it good for the blockchain moving forward?
Good for the blockchain. I mean, not really, but also I think it's kind of like not good or bad for the blockchain.
Right.
Like, I mean, let's be real. No one is doing no one's buying their groceries with Bitcoin. I don't think anyone most of the time should be in a hurry to make a Bitcoin transaction. So if the network is slammed for a week, does it really matter? Because all you were doing was holding on to your digital gold for a future time where you needed to cash some of it out anyway. Cash it out next week. So therefore, I think this is like a net good thing to have happen if you're a Bitcoin investor, because it's just more publicity for Bitcoin. Yeah, it's hypey. Yeah, it's silly. Utility, no, this is not about utility. This is about experimentation and speculation and hype. That is what it is. And, don't stress about it. And also it's like, it is a pretty expensive game to be playing. So this is kind of like meme coins for whales. So unless you're a Bitcoin whale that's also technical, and like, to be quite frank, if that's the case, you're probably not listening to us on this podcast, on this stream right now. You're probably a little bit less technical. Then, just a little bit of news, a little bit of bullishness for Bitcoin, and that's pretty much it.
Yeah, to highlight CryptoFan's comment, you can certainly pay for things in BTC. I mean, El Salvador is certainly a place you can do that. Switzerland has multiple municipalities where you can actually pay taxes and other things with Bitcoin. But yeah, this is...
Well, let me rephrase what I said then. You certainly can. You probably shouldn't be, / it's kind of silly.
I mean, I'm known for trying to buy a pizza with sats back in 2013, and it cost like $60.
You're that guy from that one news article, right?
I am not, but because he actually bought it. I didn't buy it. I was like, it's a $10 pizza that I'm going to go pick up. I'm not paying $60 in service fees to say that I bought a pizza that no one's even going to... People are just going to question my sanity. Like, why would you even do that? As opposed to, whoa, that's cool, right? So I didn't.
6X pizza.
Yeah, I got 6x rug by fees on that pizza. So, yeah,
you reverted your transaction. Is what I'm hearing.
I didn't go through with it because I just like, I'm not going to do that. I mean, I'm hungry and I didn't want to pay $60 worth. So, but in any case, this windfall has been good for miners. And if there's anybody who is obviously affected by this, this halving, it's going to be the miners. Whether you're an at-home miner, whether you're part of the big 5 conglomerates that have, farms all across the world, you're hoping for, a little bit of congestion like this. Obviously, not too much congestion, but just kind of to walk it back. The way runes work, for anybody who's really curious, is that they capitalize on what's called UTXO, which is unspent transaction output rather. And that's the part of the envelope where runes can be both marked and then used by another, well, probably what's called an indexer, to then track, where the rune coins are being both minted as well as distributed to wallets. So the runes are a separate system that are not affected by ordinals, which normally use inscriptions on the actual metadata on the sats, which a sat is an individual piece of Bitcoin. So it is a different system, and they can easily work outside of each other. Does this mean this is a decentralized solution? Absolutely not. This is all very centralized. So there is, going to be, I just don't think it's ready for prime time. We had the lovely folks from MotoSwap on a Q&A a couple weeks ago, and I still think they have a very large hill to climb to get to pretty much where most EVM chains, Solana, Cosmos chains already are at. So it's cool, sure. It's definitely a lot of people trying to cash in on it, looking to be early on something. But, is it for the everyday person who may be watching this, trying to get into this? Is runes worth it for you? No, absolutely not. There are better ways to put your money into places to get better gains than speculating on, again, metadata that could easily be wiped away if need be by the protocol. So
maybe we should call this segment not financial advice, but you probably shouldn't play around with this. It's probably not for you.
Probably not. Probably not. But again, looking back over the past 4 days, fairly nothing event for the Bitcoin halving, which is fine. Andrew has a graphic that I forgot to put up here that shows where we're at in the cycle for these things. Historically, there's always been a bit of a lull before an upward movement. So hoping that, history repeats itself, and we'll see where we go from there.
It won't repeat itself, Chris. But it's likely rhyming a bit.
Rhyming a bit. As long as it rhymes. I'm fine with rhyming. I like that. Let's see.
Until proven otherwise, my base case is that Bitcoin all-time highs are going to be next year.
Yeah.
That's how it goes.
That's how it goes. On that subject, Bitcoin post-halving demand to be 5x greater than supply based on the CEX Bitfinex. And a lot of this is based on demand, ETFs. End of the month, Hong Kong is coming live with Bitcoin and Ether ETFs. So the demand for more Bitcoin is going to rise, at least from that arena, right? More avenues to purchase Bitcoin through these funds will appear. And with less rewards being emitted per block, half, of course, this can be good for, supply shock. Well, is that the word I'm looking for? Demand is really the better word to use. And Bitfinex is thinking that it could be up to 5x, based on the daily inflows from the spot ETFs. That's obviously a bullish sentiment. So any additional thoughts, Andrew, before we head off to the next subject?
Nah.
Okay, good.
I don't really buy Bitcoin, but it's funny that I do think about and talk about Bitcoin's impact on the market cycle and how Bitcoin leads the cycle. So
yeah, and I think
it's
that's
a little
bit
funny. It's funny because we're doing all about this Bitcoin stuff, and like I don't have any Bitcoin anymore. I don't.
I have some in cold storage, but I'm not actively DCing into Bitcoin, right? And there are a ton of people in our group who are, and that's great. Feel free to DC as you like. The market will still be led by Bitcoin. Bitcoin dominance is still a thing that people measure by. So,
hey, Chris, can I share a random email that I received in the middle of the night, and for some reason I rolled over and I looked at it, and
sure.
I've been thinking about it.
It's been on your mind, living rent-free in your head.
Well, apparently I've been living rent-free in someone else's head because,
nice.
you know, I sent an email, and I got this email back. Hi, Andrew. You sent an email saying that you had sold all your BTC. Did you really? I don't know what to think. Please explain what you have done and why. I can't find the exact email, but remember reading it. I've been thinking about it ever since. Please explain. I won't miss it. Thank you, redacted. Oh gosh, don't make me full screen, Chris. That's all right.
I'm just saying I just thought I'd feature you if you're going to explain.
Yeah. I'm not.
Okay.
So I'm kind of still thinking about it because I mean it's simple, right? It's because I'm in my mid-30s, and on my time horizon, I do not think that Bitcoin is going to outperform the other assets that I'm investing in. If someone was 60 plus or near retirement, I think that calculus could be very different. You know, investment portfolios are very based on individual goals. That's obvious. But this has made me think of it because I've been thinking about how to like formulate that response in a way that's going to be helpful. But I don't hold Bitcoin because I think I'm going to make a lot more money with other stuff. You know, maybe I'll hold some after we head into the next bear market, but not right now. Anyway.
Yeah, because we still have to, go into altcoin season. You get into that comfy rotation from majors into altcoins as they start to rise, because Bitcoin will always be, well, won't always be, but will most likely be, at least in the short term, the tide that lifts all ships, right? So, no, I don't disagree with that take at all. I'm not actively purchasing Bitcoin because I believe more in ETH. I believe more in other plays that will be higher yielding in the short term and medium term. So, but when Andrew does get that specific take that he wants to respond with, I know where he's going to put it. Come join us for free on our free group, TVL, at school.com/beacon. Join the hundreds of others who are coming to learn alongside each and every one of you who are here. And learn to become a smart DeFi investor from the best in the business. And again, thanks to everybody from TVL here, and thanks, of course, to our Beacon founding members from our world-class mastermind. We can't do any of this without you guys. So shout out to all of you. And of course, give a like on this stream. Help Iago, help other people get these takes and get the analyses we'll be talking about today. We have quite a few things we're going to talk about. We have more news, and then we're actually going to talk about, I'm going to give you some alpha on how to maximize your LayerZero airdrop. And then we'll go into call for help to answer a question from the audience. So stay tuned. We got more coming along. So with that said, one thing that just passed, of course, for the U.S. is tax day. Painful for many people, I'm sure. But specifically what's happening coming in the year 2025, the IRS has released a draft of their 1099 DA. This is still a draft. You can't use this yet. Not for filing until, I think it's for the 2025 tax year. So 2026 is when you'll be using this. I don't know how to really think about some of the stuff that they're asking, right? Obviously, none of this is financial advice. None of this is tax advice either. Do your own research. There's a lot of I think education that the IRS needs for stuff like this, because they want inclusion of token codes, wallet addresses, and blockchain transaction locations. Not really sure how they're going to get all of that, to be quite honest, and how they're going to verify that, if anything. So ultimately, all I'm really going to say is, I mean, we'll have this linked in the show notes if you're very curious about learning more about this new code that they have in draft. I'm sure it'll probably change between now and later, until I guess 2026, I suppose. And taxes are a funny thing, especially when it comes to crypto. Obviously, do your best to pay your taxes in good faith. No one wants to be audited based off of crypto, because that's just a bad idea in my personal opinion. But yeah, so just
get a tax guy.
Yeah, get a tax person.
They're
get
not
a competent tax
easy.
person. Oh no. And frankly, there are a lot of tax preparers who are not well prepared to do crypto taxes either. So if anybody has a person that they trust and feel is competent and does really well, feel free to share it with our group in TVL, as well as our mastermind. Happy to pass that information on. We're always looking for good people that can help out with your form. Was 8464, I think is what it is, or 4868. No, that's the extension. 8864.
Looks like they'll probably be in high demand come 2025.
I think so. So there is your tax thing for today. It was something that just came out recently, so definitely wanted to share with you guys and just kind of keep it in the front of your mind. So do remember that most things in crypto, well, just about every event in crypto is taxable. So keep that in mind. Especially the last change for 2023 is that airdrops are, I believe, based on their guidance, and again, you have to double check, don't trust, verify, that airdrops are given to you as income from the day that you receive it. So keep that in mind. Keep records of that. And yeah, good luck with that. Speaking of good luck with that, let's talk about Venezuela. Venezuela. Andrew, I know this is like so riveting for you to talk about today. Global macro,
happy to talk
world
about
politics.
Venezuela. Sure.
Let's talk about it.
It's more interesting than taxes.
Excellent. Yes, it is. Well, Venezuela is having some issues with sanctions, and doesn't look like there's an easy answer to their issues with sanctions, with their accounts frozen in multiple countries. So one thing that they have been looking to do is using Tether as a contract currency for oil. They are a major exporter of oil, so yeah, this is interesting. I didn't put in the agenda, but I had read somewhere that Russia and China are close to also not using the dollar as a currency for agreements either. So yeah, this is an interesting turn. No comment from Tether, of course, on this. Probably better that they do not comment on such things. But something we talk about, Andrew, is the trend of possible de-dollarization, and how especially companies in the BRICS system are looking to find ways to reduce dollar dominance as a global world reserve currency. So, any thoughts on this with regards to Venezuela looking to bypass sanctions by looking to digital currency?
We're not really getting away from the dollar in this situation. They're just trying to sidestep sanctions, which may seem like a pointless nuance, but I do think it matters because if you're dealing in dollars and you're dealing with dollar equivalents, then you're still playing in the U.S. world, where if you're moving away to a different pegged standard, then that's moving more away from the US world. There's a lot of interesting dynamics going on here, because we're looking at globalization trends reversing as we have more international conflict. And we're also seeing, the rise of our decentralized financial system. And there's going to be chafing here, because it's in the global West's interest to be able to use locking people out or inviting people into their financial system as a foreign policy tool. And it's in others' interests to attempt to sidestep that. I don't think this is great for crypto in a PR perspective, because it feeds into the, crypto is for terrorists, it's for people that are trying to launder money, et cetera, et cetera. And ultimately, I think this could lead to like more scrutiny for Tether, which isn't great. But on the other side, I'm like, really, they're picking Tether? I mean, I guess Tether is very liquid, but let's just theorize that I was the dictator of an oil-rich country. I mean, I'd be really tempted to like use DAI or Liquidity, not one of these centralized stablecoins.
No, that's a great point. I not even MIM. I'm kidding.
I mean, I'd use a diversified basket of collateralized debt position over collateralized stablecoins.
Yeah.
Obviously. I think like the reason why a nation state's likely looking at Tether is just how liquid it is.
Right.
But if I, and I have never and probably will never have any interaction with the Venezuelan government. But let's just assume that, we were advisors for the Venezuelan government on this particular thing.
You get another email in the middle of the night.
Yeah, probably. I wouldn't answer that email. I would have concerns about a ton of exposure to Tether. Just because if you do have a centralized entity and your entire point is that you're trying to sidestep another government's control in this marketplace, you're going to pick like the most centralized stablecoin, really?
I mean, they definitely are making money. Let's put it that way. To be able to, back their assets. So for me, this is a little bit of a slippery slope, right? Because if they're
logical fallacy, Chris, logical fallacy.
It is, but I'm looking more at, who is probably the most lucrative cyber attacking nation state in Web3 and DeFi.
I mean, either Russia or North Korea.
Exactly. It's North Korea. I'm going to say it's North Korea. It doesn't matter. Both are,
that's just because Russia's covered the tracks better.
Probably so. But, in the case of North Korea, I mean, they have a ridiculous amount of sanctions, embargoes, all kinds of things, passed off to them. To be able to sidestep all this by using something like Tether, I mean, they've got a ton of it. They've hacked enough of it to build a tremendous war chest for them. No doubt it's what's kind of keeping the country alive right now. It's probably their best GDP facing asset, digital or not. I'm not trying to pontificate.
I mean, it's probably actually selling artillery shells to Russia, but
probably so. But at the same time, if there are more countries who are willing to get on the train of using non-CBDC digital assets as contract payment, you could see other countries, other groups, using crypto, for the terrible purpose that a lot of mainstream media has kind of painted crypto to be. So yeah, like you said, this could be a very bad optic for crypto and DeFi. I guess we'll see how far this could really go, honestly. So Yeah, but I thought it was interesting. You know, I think there's definitely a move. You can definitely see there's writing on the wall when you see stuff like this happening. So whether or not they're able to actually do this, and of course, the thing about using centralized stablecoins like USDT, they have the ability to blacklist wallets. So I mean, I don't know if I'd be publicizing this, to be quite honest. So there's that. But anyway, appreciate the take on that. We'll go ahead and move on. So funny, we've been hearing a little bit about Hedera. HBAR members rejoice that it went 100% yesterday over news that was misinterpreted by the community that BlackRock was going to be tokenizing on the Hedera blockchain. You know, it's interesting because Cointelegraph posted that this was misinterpreted, and then people are like, no, you guys are crazy. Ever since that other issue, no one should believe you. But it turns out that yes, BlackRock is not actually tokenizing anything on Hedera's blockchain.
Looks like somebody over at Cointelegraph might have been an HBAR holder.
Maybe, but at the same time, they were not incorrect. So there's going to be a fund that will be on Hedera from Archax Exchange, but it's not BlackRock's. So yeah. So again, it caused Hedera to have a little bit of a slip, but overall, Hedera is up, which, you know, huzzah for Hedera and HBAR holders. You know, I do like HBAR as a token, as a blockchain. They seem to have some things going for them. Obviously, if you're an institution, you like HBAR because it is one of the few currencies that is being allowed into the Fed Now program for, you know, shipping money across multiple sovereign rails. So Hedera does have that going for them. But, you know, from a retail perspective, I think it's always been a bit of hopium to kind of you know, see where Hedera goes. That doesn't mean they don't have a future. So, you know, while any news is good news, I guess at this point for HBAR. So hopefully they can at least make their DeFi experience a bit better, because it hasn't been the best. So we'll see. As Andrew thinks on his keyboard.
Thinking about HBAR. Deep thoughts about HBAR.
Deep thoughts about HBAR. Love to see it.
It's interesting because we seem to be in the part of the cycle where last year's stuff is doing kind of pretty well in waves. And Hedera is very much last year's stuff, right? It almost feels like this may be the sign of a slowly maturing market. If we're not just ditching our altcoins for new shiny altcoins next season, and that things are actually continuing to be built and continue to do well cross cycle.
Yeah, I'm here for it. I want to see all of them do well. I want to see Filecoin. I want to see ICP. I want to see all of it. Just go to the moon. I don't know about ADA, but, you know, we'll see. That's not a shot at ADA. I'm kidding. I'm kidding, Cardano lovers. It's okay. It'll be okay. So we'll go and move on to our what we've learned section. So I will say in our mastermind, we do take airdrops pretty seriously. It's a big winner for our group over the past couple of years through some really you know, great airdrops, specifically the Arbitrum airdrop, Starknet, and a couple of other, Celestia, Pith, Jupiter, Wormhole. So there's a couple that are left. ZK Sync, ZK Scroll, and then LayerZero and MetaMask. Those are probably the last big four that people are watching for. Of course, there's some others on some newer chains that are coming up, but LayerZero has been one that's been really anticipated by our group for a while. Looks like I keep saying H1. End of H1 is what they've been targeting, which I guess is around June. But we have a tweet from the LayerZero group, which means the timeline for the token generation event for their token is coming closer. Note that applications should ensure to register contract information within LayerZero scan. So expect to see continuous updates over the next couple of months. Of course, the obligatory, this is the last tweet in this thread, so you should not believe anything that happens on that thread afterwards. Like, there's no LayerZero token. I get dozens of these DMs or notifications in my Twitter inbox all the time. So this is a good sign. So the question you may be asking is, Chris, I've been with you guys for a while. I've been following you guys, and I'm a mastermind member, and I want to know, what can I do to increase my criteria of getting an airdrop? And again, no guarantee there's going to be one, but there is a TGE, a token generation event coming. And, based off of, certain predictors and calculators that we've talked about in our mastermind group, many of our mastermind members are within the top 15 to 20% of all airdrop criteria. So again, we don't know for sure what those are, but one that we have heard in our network is the number of protocols that you have interacted with that use LayerZero. So if you're wondering, how can I find those specific protocols? And I'm glad that you asked. So I'm going to give you a little bit of a pro tip today on the best way to find that. And that's actually going to be through the that's actually an app info thing, but they actually have a transaction explorer, not a blockchain explorer, a transaction explorer called LayerZero Scan. And I'll put this link in the show notes for anybody who's checking it out. It's also layerZeroscan.com. And the one thing that you can do here is specifically look at all of these protocols. And if you look, there's at least 3 to 4 pages. These are all protocols that use LayerZero, whether at a token standard level or, have some sort of operation that uses LayerZero in some way. So if you're looking to diversify your criteria in terms of looking for different protocols to go into, at the very least, looking for new protocols that could be a good yield farming opportunity for you, you should definitely check out the LayerZero Scan. I had no idea that there were this many protocols. If you look at this number, I don't know if that's true, 51,000 dApps. 51,000. Actually, is that dApps or is that OApps? That's probably OApps.
It's OApps.
Yeah, so those are open applications that use the Omni layer apps, I guess is how they're called, because the OFT is the Omni layer fungible token standard that they have, where you can send these OFTs across different blockchains with little slippage. Joe is a good example of that. From Trader Joe is a good OFT token. So yeah, if you're looking for a way to find additional LP spots.
Clearly, it's like this is what they're trying to get people to look at. They're trying to do a little bit of cross promotion for the applications that are using their infrastructure.
Yeah. Yeah, absolutely. I was going to bring up an example. Let me just.
Every time I see Taro on a list, I forget who it was, but I know one of our friends met some of the Taro guys at ETH Denver and mentioned that they were like absolutely jacked. So every time I see the Taro on a list, I'm like, oh yeah, it's those really fit devs.
The fit devs.
Yeah.
That is definitely a.
They're leveraging up their muscles or something like that. Yeah. Yeah.
Yeah, so I'm looking for my notes are not coming up, but I'm looking for the specific protocol. It's called Merkley. Pardon me. Yep, got it. So one of these is, this was on here, but so using Merkley, one second. Using Merkley, if you look here, you go to their LayerZero section. So they have this ONFT bridge. So what you do is you mint an NFT and then you can bridge it between different blockchains. I did between, on our example, I went from base, which is right there, to optimism, within the same super chain. That was a nice idea, but it cost about a penny to do. It cost me about less than 10 cents to mint. So, that's one down. Obviously, I don't know if it's transaction based, like how much you're doing, or if it could be, your reach in terms of how many things you're finding. But definitely from an alpha perspective, I do think if you go in here and you check out all of these different protocols, if you happen to find, a couple protocols that are there, use your wallet that you've been using for airdrop farming to do a couple transactions, and you should improve, in my opinion, your portfolio for getting a better airdrop. So again, not financial advice. No guarantee that we're actually going to get a huge airdrop based on criteria that's never been specifically outlined. But for the many people who've been farming this for a very long time, here's a way to really build up your criteria, because I have heard, in our network, that the number of smart contracts you interact with that are using LayerZero is a criteria. So here's a really great way to, not only just get into protocols that use LayerZero, but maybe find some new opportunities. Like, for example, Maverick Protocol, which is a VE33 DEX on multiple blockchains, like on ZK Sync and whatnot, is not a bad place to try and farm some LP. So that's definitely something you can do. But yeah, just wanted to outline that. Andrew, have you done transactions at many of these protocols?
I mean, honestly, no, probably a fourth or less. That's a lot of protocols.
Yeah, it kind of took me by surprise when I saw how many. I mean, I've done a lot. As you know, I like to go speculate and look at a bunch of different things. But just seeing some
of the reasons you tend to do really well on airdrops.
Yeah, I mean, just looking at what's here, I mean, there's
you're a bridgeor, if you will.
I am a bridgeor. I do like looking at different blockchains. Some of these I'm just like, wow. I mean, obviously with the wallet that I'm going to qualify the most on, I've used quite a few of these, and some of these are worth just looking into just to see if it's a really cool idea. Like Angle is a EU-based stablecoin product that they do LPs, and they had I think it's EURC. I think. But no, that's Circle's version. But they have a specific one that's around. So in any case, just wanted to share that with you guys as some alpha to really just bolster your LayerZero eligibility. So good luck to you on that. And with that said, it is time to come into call for help, where we go ahead and answer a question from you guys. And the question that I received today is from Shane. Thank you, Shane, for the question. And the question is, are trading bots good?
Oh, gosh.
It's a loaded question, Shane. Oh, that's a loaded question. So the best way to summarize how we feel about trading bots, and I get fed a ton of them.
No.
Overall, no. Trading bots are good until they are not. I do not want to see anybody I know putting a ton of net worth into trading bots. Why? We've seen too many people get wrecked by them. It's good for a little bit, and then something happens, and then suddenly you got no more money. And I've seen it happen multiple times in the 4 years I've been in DeFi. And it's by people that I thought knew better, honestly. There's some people who tend to do okay. That's good. That's fine. If it's a tool for you to gain an edge, it's a tool for you to gain an edge. I can't fault that, because it's all about building an edge, refining an edge, maintaining an edge. But for most people, they will not maintain an edge with a trading bot. Simple as that. The degen rule of, getting 3 out of 10 good ones, because hopefully one of the 3 will break even on the 7 that didn't, is a really dangerous game to play. So overall, it's going to be a no on trading bots. Any thoughts, Andrew?
No.
Okay. But that's quite. Go ahead.
So there's a key distinction here, I think, which is like when you're trying to extract money from the market and you're trying to outperform the market, you run into a lot of scams, right? And it's kind of a scam to think that that someone with a really good special trading bot would sell it when they would probably have more money to make not sharing what they were doing. And the skeptical of you may think, well, then what about DeFi? Isn't that the same? Like, why are you talking to us about DeFi? Couldn't you just be doing it yourself? Well, unless I was a billionaire, which I am not, there is a lot more, like, there's simply capital that we don't have, that you have, that you can make money on. And it doesn't really hurt our yields for you to be participating. So, well, DeFi is more of a rising tides, raise all ships. Trading bots are kind of a winner take all kind of thing. At least that's my perspective on it. I like automation, don't like trading bots. If I were to use one, it would probably be like one that was private, not something you could go purchase. And it would be like a very specific strategy, and it would probably be something more on chain and not something that was related to centralized exchanges.
It's a fair point. We do use trading bots to a degree. I wouldn't say that they're necessarily trading bots. They're more like smart contract automation tools. Scats, if you want to call them that. That's a really terrible. God. No, I can do that. Yeah.
SKATS, right?
Yes, there we go.
Right. So, yeah. Automation tools, yes. But like trading bots, grid trading, like the same strategies people have been using for the last 10 years, no.
Yeah, there are plenty that are out there. I'm not in love with most of the yields that most of the grid trading bots do. So it's up to you. Obviously, give it a try. Don't put your whole net worth into it, please. Have some restraint when you test.
Remember, everybody looks smart in a bull market. You don't actually have to be smart to look smart in a bull market. It's, how well is your downside protected? How well does it perform regardless of market conditions? That's what you should be thinking about.
Exactly. These are all things that we have in our free group, TVL, Total Value Locked. Join us for free today. Join the hundreds of others that are in our great community at school.com/beacon. All right. Well,
I'd like to say it's the fastest growing crypto group on School. And I think that's probably true, but I can't say for sure that it is because I haven't really looked. All I know is every time I look, that number is like higher and higher.
Yeah. So obviously thanks to everybody who is a member. Nothing but great feedback so far. Everyone bringing their friends and family in, which is what we want. Ultimately, I want to normalize DeFi, as something that is normal, as a great way to, get return on your investment, and building a fantastic community of people that can lean on each other. And definitely a great community to join. You, of course, learn more about our DeFi mastermind, the Beacon Mastermind, when you join School as well. If you'd like to join the elite group of us that are out there as the most successful mastermind of all of DeFi. So, That's all we got for you guys today. Thanks for joining us. If you have a question you'd like for us to feature on Call for Help, feel free to join School. You can email me. You can say it on School. Have a question that you would like to be answered. Happy to do so. And yeah, just love hearing questions from our community. We love to be helpful resources. We're not here to drive Lambos. We're here to help you guys win. So.
And you can email Chris at beacondefi.xyz and ask him why he sold all his Bitcoin.
Digital gold, sir. Digital gold. All right, guys. Have a great day. We'll see you next week. 07. Beacons up. Banks down.